Traders, welcome to Trading Together. I'm Mel Gacee. We are getting a little bit of a late start this morning. I was having some technical difficulties, so I apologize, but never fear. We are here. We're starting, and we are going to take a minute to let me just. You haven't said hi yet, drop your name in the chat, drop your comments and questions. I'm always happy to meet you, always happy to answer any questions that I can. This is a safe, interactive stream where I want to be able to help you to get profitable in your trading. So I want to teach, I want to help, and I'm going to take some trades live in front of you. So welcome, drop your name in the chat, say hi, ask your question. Love to answer them, and I'm happy to have you here. So welcome. And check on a trade. Here I've got my limit order for profit sitting. I'm just waiting for that to hit. Well, we're so close. Come on now. Let's give it one more. All right, friends, that was a beautiful trade. And I'm sorry that you weren't here to see the beginning part of it, but I was in 22 contracts of a call here, and that was a really nice trade for me. So very, very fun. And sorry, again, I was already in that trade as I started the stream. So the market waits for a man or a woman. So I was in earlier, but that was a of a call there, and look at that beautiful rise. So that was gorgeous. All right, let's talk about the market we're getting today, where we're at, where we've been, where we're going. And Wes is here. Good morning. So good to see you. Thanks for saying hi. I do appreciate you. All right. So we opened up the morning basically with just a bit of a drop, nothing big. Inner joy vibes. Good morning. So great for saying hi. I love that. That always makes my day. I don't have to trade alone. Trading can be a lonely profession, and I love having you guys here with me. So please, like I said at the beginning, don't be afraid to drop your questions or comments right here in the chat. I'm going to answer them as best I can. All right. So again, you just saw me take a 22 contract win on. It was a lot of fun, and unfortunately I started the stream, I was already in the call because I saw this move forming right here. So let's see what our next move is going to be. Let's see where we're going today, and we'll start off by talking about where we've been overnight. So my charts are very busy. As you can see, I have a lot of lines and a lot of indicators, but there are a couple of sets of really important lines. These yellow lines here, I mark those off every single day. These tell me what the overnight low was, what the overnight high was. These blue lines right here tell me what yesterday's low of day was, what yesterday's high of day was. Those are very important as well. I mark off every morning at the 15-minute mark. I take the high and low at 15 minutes and I mark that off. And as you can see, it was a tiny little move. Are giving us the opening range. And if you've been trading at all for a little while, you'll hear a lot of people talk about an opening range strategy, a breakout strategy. I don't necessarily trade those breakout strategies, but I do gauge how far above or below this opening range we are. And today you can see we've really stayed by and large inside this range. Okay. So the 15-minute range is the green lines. We've stayed basically inside of there. We came out of it right here at this push. We came below it right here at this push, but we're right back into it again. So today, by and large, has been a range-bound day. So as we take that into consideration, I'll say it this way. Range or sideways motion is kryptonite to the day trader because we thrive, our nutrition, our sustenance comes from, our food comes from volatility, from volume, from movement. And when volatility is low, when movement is low, when it's stagnant, that's when our time value runs out on our options. So on this stream, I'm going to trade options with you every day. I'm here every day at 9 a.m. Mountain. I'm going to trade options with you. And I'm just trading simple single leg options. Now, I've been trading for 20 years. I do trade calls, spreads, put spreads, debit spreads, credit spreads, you name it. I do sell options. I do all of those things. But here on this stream, we are going to trade single leg long options, meaning we're going to be the buyer of the option and we're going just one leg. In other words, one option. We're not doing spreads. We're not doing multi-legged options. We're going to keep it simple here. And I'll tell you, single leg directional trading is my bread and butter. Like I said, I do take spreads. I do all of that stuff, but I really, by and large, make my money every day by trading single leg calls and puts. And that's because I'm scalping. I'm in and out quickly, right? So I took a trade here on this run up. I took a call here, made about, I think it was 10%, 9%. And then the drop here, I did not trade it. But I did trade this rise right here, as you guys know. You saw my order get filled there. I had 22 contracts that got filled at my limit price for my profit, which is exactly what I wanted. And so I've traded a couple of times this morning. It's been profitable. But by and large, that is my bread and butter, are these quick in and out scalps and moves. That's what I'm looking for. So when you trade with me, sometimes we're going to be really fast. And if it's hard to keep up, that's okay. If you're a new trader, I recommend using paper trading or virtual trading if you're still getting the hang of it. Don't put your precious capital on the line if you're not quite comfortable with the ins and outs of your system, with the ins and outs of options. That can be and the way I trade is very fast. So if you're trying to follow me, start out with a paper account. That's what they call it. Charles Schwab has paper money, and so do a couple of the other trading platforms. But looks like Inner Joy Vibes has a question about the FOMC meeting today. Thank you for asking that. It's actually a release of the minutes, Inner Joy. So we're not getting an actual meeting today, but you're really right on there with asking that question because it will be a market mover very potentially. Doesn't have to be, but a lot of times it is. And I'll tell you what my thoughts are on that. Right now, about 80+% of market participants are betting on no rate cuts at the January meeting. We've got a meeting coming up in January, an FOMC meeting. And if you're all are not aware of that, that's the Federal Open Market Committee. They are the ones who set the interest rates basically for the country. They set the Fed rate, the Fed fund rate, and then everything else kind of trickles off of that. And so you'll probably, if you've been around trading any length of time at all, you'll hear people talking about rate cuts and what that means to the market. The market loves it. The market loves when we cut rates and when we ease the financial situation, quantitative easing. When we do that, the market thrives on that. It's basically free money. It's basically great liquidity for the market. So we, the average people out there trying to feed our families, we are struggling with inflation, right? Everybody I know is really struggling with inflation, but that's not what's feeding the market. The market is not thriving off of the economic condition. The market is thriving off of this free money that the Fed keeps printing. And as we keep moving into this quantitative easing and these lower rates environment, you're going to see the market continue to really like that. Even as the country, in my opinion, could possibly be heading into recession. Labor numbers don't look good. Manufacturing numbers don't look good. Economically, it doesn't look great, but the market keeps marching upward because of what the FOMC is doing. So, Joy, you have hit on the exact pinpoint of what is really driving this upward movement. So today we will get those notes. They come out at 2 p.m. Eastern. The market is pretty much convinced we're not getting a rate cut in January. We've had a couple rate cuts, but we're probably not going to get one in January. That's what the market thinks. If these meeting minutes come out, and this is where we get to see what the whole committee thinks, how everybody voted, what everybody thinks, what all the members are planning moving forward. That's where we get to see what went on behind closed doors, these meeting minutes. And so when we get those, the market is going to parse that really quickly. You will see, I mean, that I'm sure they have algorithms in place to parse this language, right? And when they get that, when they get those minutes and they parse out the core, the meat of what the meeting was about, the market will many times make a decision to move up or move down. Sometimes it doesn't affect it at all. Sometimes it's just everything is what we thought it was and everything's the same, no change, market stays still. But if we get any kind of surprises in there, if there's any hint that, well, maybe we could get a rate cut at the January meeting, or, we are absolutely not looking for rate cuts over the next 6 months and we're just going to hunker down. So either extreme, they call that dovish and hawkish. Dovish meaning we're looking for rate cuts, hawkish meaning we're looking for rate increases or no rate cuts. So when you hear, they'll say, oh, so-and-so member is dovish and so-and-so member is hawkish. It's just another way of saying kind of bullish or bearish, right? Dovish being kind of bullish. We want the market to go up. We want the rates to come down. And then hawkish meaning kind of bearish. We don't want to see any rate cuts. And usually when we see that, the market tends to kind of move down. So, when we get those minutes, the market will very quickly assess what this means for moving forward, what this means for rate cuts, what this means for quantitative easing. And so as long as those members are being dovish and everybody's happy about quantitative easing and rate cuts and free money, we could see the market react really positively. And to the contrary, if, like I said, if we get this hawkish response or a bunch of members are hawkish, we could see the market respond negatively. And again, if it's business as usual, we may just see the market continue to move sideways. So long answer to your very short, concise question there, Interjoy. But that is basically what the market is looking for as we come to the FOMC meetings today. And you're exactly right on. We need to watch for that because at 2 p.m. Eastern, we could see wild swings. And so how do we trade that? So today we had a little data, and that's the same question, right? When we have data, or FOMC meeting minutes would be classified as data. We had other data today. We had the Chicago PMI today. When we have data, we need to be aware of it. And so I use the economic calendar by Bloomberg. I'm going to drop this URL. I'm going to drop this in the chat for you so that you guys can use it as well. It's a free product. Bloomberg puts it out. It's great. And here you go in the chat. This will give you a calendar of what the economic events that are coming in to affect the market. And this calendar uses, it's kind of a bullhead rating system. So if it gets 3 bullheads on this calendar, if there's 3 bullheads next to it, that's telling you this is important to the market and pay attention. 2 bullheads, moderately important. 1 bullhead, market doesn't really care that much. So that's kind of a nice little rating system that Bloomberg does for us to tell us, kind of gives us an idea, all right, what's important, what's not important. So today we got data right here. Let me get to right here. We got data, and we opened the morning after a really long, very tight range overnight. We were in a 14-point range all night long. That's very small range. You can't do much in a 14-point range. You just can't make a lot of money in a 14-point range. but we came into the open. So this gray area here is pre-market. The black area here on the chart is real-time hours. We came into the market and boom, we had this drop. Now I didn't take this put here. Puts are when you want the market to go down. Calls are when you want the market to go up. I did not take the put here. And I considered it, but I wanted to give this a little time because we had data coming up at 9:45 Eastern. Well, what happened exactly at 9:45 Eastern? Let me zoom in so you can see it better. What happened at 9:45 Eastern? Boom, we got data. We got Chicago PMI much better than expected. Now, Chicago PMI basically is a survey that measures manufacturing in the Chicago area, measures the health of manufacturing. So when we got the data, we got this boom, this jump up. Well, I traded that. So I stayed out waiting for data. And then as soon as I saw the reaction to the data, I jumped in and I traded that to the upside. So what I'm pointing out here is that we need to be aware of data, and we are really climbing right now. We are at the overnight high here. And I'm considering calls right now. Our VIX is dumping. I'm going to load up some calls here. I'm going to look at the 688 calls. These are today's expiration. I'm not getting in just yet. I'm watching. We just crossed the overnight high. So let's see if we get a reaction. Last time we crossed the overnight high was right here and we dropped. So I want to see, I'm going to give this a minute and see if we get a higher high. And we are getting a high. Is this too high to jump in? Is it a little dangerous here? We are at the high of day right now. Yes, it's a little dangerous here at the high of day. We don't know if we're going to continue up. If we could get a quick little pullback, I would love that. All right, I'm going to take a quick call here. I'm in those calls, 688s. And we're getting a little pullback here. So this is a little bit of a challenging trade. It was a little high, but we do see the VIX falling. So I'm going to give this a minute. And then we'll talk about how to trade that FOMC data, just like I was just talking about the data trade that I made earlier. All right, so we could get a reversal here. And if we do, I will jump out at a loss. All right, I'm going to give this a minute to see what it wants to do. In the meantime, we're going to talk about trading the FOMC meeting minutes. So Usually I want to be flat going into any kind of a data announcement, which is exactly what I did this morning. I was flat moving into that PMI announcement. And the reason for that is you don't want to be stuck in the wrong direction, because there's really a lot of times no way to know how the market is going to respond to data. So I like to be flat, meaning I don't like to be in any positions when we get important data. It will be the same going into the FOMC announcement. I want to be flat going into that, because we don't know what's going to be in those minutes. We don't know how the market's going to respond. So that's the one thing, right? So going into data, I'm flat. Then the second thing is watch for the reaction. Now, sometimes the initial reaction is not the true reaction. Sometimes we get a little bit of a whipsaw up and down motion. And so, especially if it's a big data announcement, we can sometimes get that reaction to just whipsaw us. So I a lot of times will give that a minute when we get the data. I'll give that a minute to see if it's a true reaction. And if it seems like it is, then I'll go. A lot of times I'll go ahead and play that. So something to be aware of there. All right. So this has moved against us, and that's okay. I'm going to give it some space here. And it was a little bit risky getting in at the high of day. So that was a little bit more of a risky trade here, but let's see if this thing can go a little bit higher. If not, we'll jump out. We'll take a loss on it, and that's okay. It's really important to be able to stop losses and not hold losers, especially when we're trading 0 days to expiration. All right, it's giving us a little bit of a downturn here. We're coming back under the overnight high, so we got to watch for that. I think we could possibly have another leg up here. That's what I was kind of thinking when I got into this trade, that we could have another leg up here. But it's been a kind of a slow mover and a small range. That's been part of the problem. So we've got a little reaction here at the overnight high, nothing major yet, not dropping too far. All right, we're just kind of holding here. Very, very tiny moves right now. No real movement whatsoever. teeny little, what we would call dojis, these little candles that have a wick on either side. All right, this one's moving just a little bit better. Let's see if we can get a bounce off of this overnight high for another leg higher. Just not moving right now at all. Really holding this overnight high right now. See how it just is holding this line so far? And right now, all we can do is wait and see what it does here with this overnight high. We either bounce from it or we break down through it. But right now, it's not making a decision. And so, as I usually say, 90% of trading is waiting. Takes a lot of patience to trade, a lot. It's very challenging. It's given us a little look of a breakdown here. All right, coming down through the overnight high, just a little bit. And what I will look for to stop out is I'll look for a turn in the upward direction and then stop out while it's moving upward. It will turn to the upward direction. We just don't know when. So that's what I'll look for the stop out. So it's just very, very slowly stepping down. So that tells me there's not a ton of selling pressure right now. So we'll watch and see if we can get it to step back up again. All right. So while we're waiting on this, we can talk about the VIX a little bit. This, like I said, I'm going to wait for this to turn upward before I stop out. And that means it could drop a bit, but I'm okay with that. While we talk about the VIX, what's going on here is that the VIX is the lowest we've seen in over a year. So that's really something to be aware of. And now remember, the VIX is the volatility index. It gauges the fear in the markets. So it does that by looking at options out on the S&P 500. And when it senses fear in the market, the VIX goes up. Usually the market comes down. When it senses exuberance in the market, the VIX goes down and the market moves up. So right now, the VIX is the lowest we've seen in over a year. So that's pretty impressive here. So let's take a look at the daily. And rest assured, I'm keeping my eye on this chart right here with our trade. So no worries. All right, so let's look at the daily on the VIX. All right, here we go. I'm going to go back 2 years so I can show you what the VIX did over a year ago. So here we go. Let me zoom in a bit. Okay, and I'll move it up so we can see it better. All right, our price movement is coming down to the VWAP, so I'm going to be watching it here and see if we can get a bounce from here. And if not, we're going to, like I said, wait for that upturn to stop out. We will get the upturn, we just don't know where. Okay. So on the VIX, back here in November of 2024, we came down. This support line right here, I've had drawn on my chart for a really long time. And we came down through that support in November of 2024, and then we got this spike. And that corresponded to a little drop on the charts for the main markets, right, for the indices. Then we came down again in December, and then we got a big spike in December. And that corresponded to a pretty good sized drop in the markets. So when we see VIX at these levels, we have to be aware that we could be getting ready for a spike. So spike on the VIX, meaning a drop in the market. So when we see the VIX down here at these levels, we got to be prepared and watching for the other shoe to drop, because it will at some point. So the VIX can stay in the 14s for a really long time. It stayed back here for, look at how long it was in this 14 to 12 zone, a really long time. That was what, 24, I mean, almost a year. What is that? That's January through July. So half a year it stayed kind of, and we did get that pop in the middle, but just be aware that it can stay here at these suppressed levels for a long time. But when we start doing these dips, we can see spikes on the VIX. So just be aware. I don't think we'll see the VIX spike until the new year, but we've only got 2 days for that. So it's very possible that it does. But I think we'll get that spike after the new year is kind of what I'm thinking. Doesn't have to, but that's kind of what I'm thinking. So just be aware of what the VIX is doing here. It is definitely suppressed and could be popping up. So something to be aware of there. The other thing I'm going to take a look at here in a second is what I like to call the leaderboard, or AKA my watch list. So on the watch list, I'm keeping an eye on the major players in the indices. So the Mag 7, right? The big mega titan, the big tech stocks, those are the ones that move the S&P 500, they move the NASDAQ. So I always have them on my watch list. I'm always watching them. And that will give us some idea sometimes of where the market is headed. So right now we've got Meta is up a bit at 1.1%, Tesla up at 0.5%, Broadcom at 0.4%, Microsoft 0.3%, Google 0.3%. The Mag 7 ETF is up just a little bit at 0.18%. Qs are up just a little bit ahead of us, but that's not part of the Mag 7. I'm just looking at the NASDAQ and what it's doing. And then on the downside of the tech stocks of the Mag 7, we've got NVIDIA down just a bit, 0.1 at its flat line, Amazon 0.17. So really, for the most part, Mag 7s are kind of green. So that's a good thing. All right, looks like we're getting a little movement here at the VWAP. So I'm watching this to see if we could get a bounce. VIX giving us a little drop, not much, just a little one right here. So remember, VIX running inverse to the indices. We see the VIX going down, we see the markets coming up. Usually that's the way it works. Not always, but almost always. All right, so let's see how we behave right here at the VWAP. Let's see if we can get this moving average to turn to the upside here. Now the VWAP is this white line right here. That's it stands for the volume weighted average price. It's, in essence, it's a moving average line, but it gets a little bit more attention. It puts attention on the volume. So if we have an area of high volume, for example, if we look at today, zoom out a little, these blue bars here, these are volume bars. When we see a volume kind of pick up, the VWAP will register that and will kind of notice that there was more volume at this price. And so it gives a little bit more weight to that price. And that's what we're looking for when the VWAP is moving any direction. Right now it's moving just slightly upward. I like to see where the price is in relation to the VWAP. We came right down to the VWAP on this drop. We got a little stall out, and that's kind of what we're doing right now, is stalling out. Let's see if we can bounce from here. We're starting to get the moving average to turn just a little bit here. And that's what we're looking for. Remember when I said we would stop out when it turns upward and after we get an upward move. So that's what we're looking for, is this, basically this line right here, the whole moving average, to give us a little turn to the upside. And there it goes. It's turning a little bit blue here. That's what we're waiting for. See if we can keep that momentum moving to the upside. And really what we're seeing today is it's not a ton of buying or selling. It's a lot of ranging. So I feel it's fairly reasonable to expect that we could move back up, because as you can see, when we zoom out, look at the range, up, down, up, down. So I think it's very reasonable to think we could move back up. Now, could selling kick in at any time? Sure, it could. But I'm going to watch and see if we can get this moving average to turn for us here. And remember, stopping out is part of trading. We have to take stop outs. But I'm usually selective about where I take them. So they don't bother me. I take stop outs pretty much every day because I trade several times a day. So there's nothing wrong in it. It doesn't feel fun in the moment, but you got to get used to taking the stops or you will blow up your account. So that's something that's really important. Be aware of how important it is to make sure you're stopping out. So right now we're just kind of hovering right here at the VWAP. I'm waiting for a turn. And we're not getting it yet. So this has been the range where we opened this morning. This has been where we've been revisiting all day long, right back where we are, just right here. Right here is pretty much exactly where we opened, and we've gone over, gone under, but really this is where the average has been today. We also are watching, I always watch crypto, so I'm seeing Bitcoin coming back up a little bit, which is great news for Bitcoin. It's sitting right now at 89. we've kind of been in a range on Bitcoin as well, kind of between 85 and 89. We did hit 90 yesterday or the day before. We hit 90,000 on Bitcoin, but it kind of bumped its head and came back down. So we've been kind of just in this sideways range on Bitcoin as well. It's going to need to clear 90 to get back up, moving toward its all-time highs. But I think it's going to do that. The issue for Bitcoin is it's still considered a risk-on asset. So people look at Bitcoin as more of a risky investment. So that is where you'll see if the market itself starts going south at the new year, we could see Bitcoin go south with it. But I do think Bitcoin is going to really push up in 2026. That's kind of what I'm thinking about it. And it's going to become more and more mainstream. Like I said, right now it's still considered a risk on asset, but I think Bitcoin is going to become more and more mainstream, more and more. Wall Street is embracing it. We've got a lot of, BlackRocks and big companies like that creating ETFs on it. So it is becoming more and more mainstream. All right, little drop here, getting some sell signals. Definitely getting a little move up, a consistent move up here on the VIX. As it tries to recover that support line that we talked about. That's this line right here. So if we end this stream and I'm still in this trade, my plan on that is, like I said, waiting for the upturn and stopping out. If I get some really good buy signals, I may average this trade. I don't always average, but on a ranging day, sometimes it's worth the risk. So I'll wait and see if we can get this to turn up and we get some buy signals. I might average it. But right now it's looking like we've got sell signals right now. So we might take a quick put here, but I think I'm gonna wait on this call for a minute to get out of it. Let's see what we get here. Little bit of volume coming in here. All right, Wes. Well, thanks for being here this morning. And I'm going to drop off here in just a couple of minutes as well. But I appreciate you. Have a great rest of your day. All right, just very slow motion here. And I'm just waiting for the upturn. It will come. We just have to be patient. So, yeah, so plan for this trade, waiting for the upturn. I'm going to either stop out or average based on if I get some buy signals or not. We have not really dropped too far below the VWAP, so I'm not seeing a lot of sell pressure here. It's more ranging behavior. So that's why I'm feeling fairly confident that it's going to move back toward the upside here. And I probably will wind up averaging it, depending on what we see, what happens here. So that is the plan for that trade. And if we continue to drop down through the overnight low, I'll definitely join in on some puts here. We're getting some volume, a little movement here to the downside. So we could consider puts even right here. Let's see what this volume bar gives us. And that's going to bring us pretty much to the end of our stream. So you've got the plan for this trade. Moving forward today, again, I think it's ranging and it's okay to trade the range. We can trade from the bottom to the top or from the top to the bottom. Be careful not to trade right in the center of the range. That's where it gets a little bit more dangerous. But I will be back here tomorrow morning at 9 a.m. Mountain. I'll let you know how this trade went for me, whether I wound up stopping out or whether I average it and we move up. So I'll let you know for sure tomorrow. And I'll be back again tomorrow morning at 9 a.m. Mountain. I appreciate you guys so much. Thank you for being here. And we will see you all again tomorrow. Bye for now.